Yo, what's going on, guys? Welcome back to another valuable video. In this video, I'm going to be talking about time frame alignment. Okay, this is very crucial in your trading career. When you're looking for a setup on the lower time frame, you need to know where it's going, where it's headed on the higher time. Okay, so you need to align the higher time frame with the lower time frame so you can get ready for an entry. Okay, so I'm going to show you that. I'm going to give you a little diagram. Shout out to XM Trader on Twitter. This is his diagram, well put together. Okay, so before we get started, I want you to go like and subscribe. We'll drop a comment in the comment section below, video you want shot, something like that, anything that you're struggling with. Okay, don't forget to join that free Telegram. Free. I've been dropping more charts in there. Okay, when I do take setups, if you've messaged me on social media platforms, I'll get back to you soon. I'm still it's actually been one to be on a social media fast, not to be distracted, not to look at, the shining syndromes and stuff like that, not to see anybody else's success, just solely focused on my students and myself. Okay, so let's get started. I'm gonna share my screen. Okay, let's go right into trading view. As you can see right here, guys, this is time frame alignment. Okay, I want you to screenshot this. I want you to write it down, pause the video, whatever you need to do. Okay, I'm going to go through individual step process of these right here. Okay, time frame alignment, higher time. You want to go from the monthly level. Okay, that is if it's internal liquidity, some type of fair value gap, efficiency, okay, or high or low. Okay, that is what price is drawn to. Okay, if you guys don't know what price is after, all it is after liquidity. All it wants to do is fill inefficiencies and take high and low. Okay, so if we have a monthly level, we want to drop down to the daily to look for structure and PD arrays. Okay, and then you want to drop down to the 1 hour and get your buy or sell program, your entry. Okay, weekly level. Okay, weekly levels, 4 hour structure, PD arrays, 15-minute buy or sell program entry. Okay, daily levels, 1 hour structure, PD arrays, 5-minute buy or sell entry. Okay, 4 hour levels, 15-minute structure, PD arrays, 1 hour buy or sell. Okay, this is more of your swing traders, intraday traders, scalp. Okay, so if you want to be swinging, you need to be on the this program here. If you want to be intraday trading, this program, and you want to be scalping, this is program for you. Okay, now I'm going to run through each individual one. Okay, so let's go to, put me up here. Let's go to NASDAQ. Okay, so you can go, let's go to the monthly level. Okay, monthly chart. And I want you to pay attention to this low and this low. Okay, so what did I tell you? When the market takes a higher low, you want to be thinking, okay, I just took a low, I just took liquidity. Now what is the market going to seek internal? Okay, what is in the way from this price leg down, taking liquidity back up? What's in its way? Okay, as I can see, there's a fair value gap right there. That's internal. Okay, and we have a high right there, which is external. External liquidity, internal liquidity. Okay, now what do we want to do? We want to drop down to the daily, because now that we've swept a low, okay, you don't have to, because guys, this is the monthly chart. Okay, you don't have to say, oh, I want to take a trade in here, and then, from all the way from here to there, that's a long time. Okay, so if you're going to swing, you need to get to the lower time frame so you can catch a more precise entry. Okay, so we'll go to the daily. Okay, and you can see here that we have external highs and lows on the daily, and also internal liquidity on the daily. So you can see the sweep, okay? So you can see here what's in its way. Have a high. That's external right here, okay? We have another high right there, okay? Which this would be external. Because if you're sweeping, then you got to think about it. That's sweep here. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 days before it got up to that high. So let's focus on that high, okay? And then you have the inefficiency right here. So now you see how we have went from a monthly level lows being swept, okay? Even knowing that there are internal liquidity on the monthly time frame, but you're wanting to drop down to the lower time frame to catch an entry, because depending on how long you to swing this thing, you can swing it from this low all the way back down, all the way back up to internal liquidity on monthly. That's cool. You're just going to be holding for a long time, right? So I'm not a swing trader. If that's your cup of tea, by all means, try it, but that's just not my cup of tea. I'm just showing you an example, okay? So you can see this high is what I would pay attention to, okay? So you can see here, we got the sweep. Now, let's go down to, here's the sweep. Let's go down to the hour time frame, find our setup, okay? I need to go back to the daily real quick. Hang on. Sorry about that. I need to figure out what day that was. October 13th, 2022. Okay, cool. I'm just going to do this. Okay. Now look, do you see our setup, our whatever you want to call this, the 90% pattern, the turtle soup, the unicorn setup? It's there, okay? So look, accumulation over consecutive days, 1, 2, 3 days. I can consider this, consolidation, okay? Look at this news driver. This news driver sweeps liquidity, displaces back up. What are we want to see? Okay, you can see a break of structure. The very next day, we return into what? Here's your breaker. Okay, there's your breaker. You could have gotten an entry there, because your stop loss is going at the low, right? So your entry could have been here, still low. That's kind of a big stop, but you could have entered consequent encroachment of that fair value gap, since it was so big, okay? So we're going to put 2 entries. I'm just going to eyeball it, halfway point and at the break. So let's go all the way to the high that we would be chasing with both entries, okay? So you can see there, we got a 2.76 R on that setup, and then we got a 2 R on the other setup, okay? Now, what I'm trying to show you is we identified that a monthly low was taken, okay? Then we went down to the daily structure, okay? We went down to the daily time frame. Go back to the daily. Okay? We identified, after we swept liquidity, where our next draw could be, our next PD array, okay? Our next point of interest, our next area of value after we swept. Because what do we want to do? We want to trade from external to internal. We want to trade from external to internal. We don't want to trade after we hit this external. We want to trade back to internal, okay? Or we can trade from external to external, as we did. You can see right here closely, there's a fair value gap right there, okay? Now, could you have defined this and got even lower on the lower time frame? Absolutely. Absolutely. But at the end of the day, you went all the way from monthly, daily, figuring out where your market wants to go, and then you broke down to the lower time frame alignment, which would be the 1 hour, to catch your entry. Okay, that's a swing. Now, if you were to hold, let's just say you held this trade. I know you weathered some. You're swinging because you got, you know what I mean? Like you never know. So let's say that you held all the way to that fair value gap. Okay, that's a 4R. Ended up pinging into this internal liquidity because this would be external. That's a high, and this would be external. That's the new low. Okay, so you swung a 4R all the way from this where you entered at all the way to here. Now, what if you swung all the way to that external high? Okay, it just took you a long time to get there. Okay, but at the end of the day, there's a 9R trade. Okay, now if you swung all the way down to that fair value gap talking about, which we just tapped into, you're talking a 13R trade. Okay, you just had to hold that almost a whole year. Okay, for a 9R trade. That's not my cup of tea. You know what I mean? Like that, there's availability of 9R trades on the lower time frame within, like, you know, if not the same day, or, you know, expand of 2 days, 3 days. I'm cool with that. I don't want to be waiting a whole year for profit. Okay. Now there could be other ways, like if you got into the lower time frame and you caught a more precise entry. This was just for a time frame alignment for swinging. Now, if you caught a precise entry, of course, this RR is going to change. Okay. And you held it that long? Yes. Okay. Now let's go, now that you understand that structural monthly, daily, 1 hour entry, let's do weekly. Okay. So let's go to the week. Okay. Let's do this. So now that we're on the weekly, same pair. Okay. I want you to pay attention to this high right here. Okay. These two relative equal highs. Okay. Those are external liquidity right there. Okay. Two relative equal highs. You can see that we pinged into it. Okay. And then what happened? We started to pull back down. Okay. So now what I want to do is I want to break down to the 4 hour structured PD arrays. What would my market, what would my market be chasing going back into internal? Okay. So we're on the weekly, we'll go down the 4 hour. Okay. Once we swept those highs, you can see that we did not have any market structure shift. Okay. So it was continuing bullish. But once we broke down, okay, once we had a market structure shift, which was right here, okay, low, you come up, break up market structure, you clearly see that was a clear indication of a market structure shift. Okay. Now I'm going to go down to my 15-minute time frame, because now what do I have in my way? What do I, if I'm bearish now and I'm going to chase internal liquidity, I have, if I'm already broken structure now, okay, that high that was taken is relative equal highs, and now we're breaking back down. I have lows. I have fair value gaps right there. Okay. I have a balanced price range right here. You can see really closely. Let me zoom in. Let me get this off my screen. Okay. You can see here on this candle, okay, it offered buy side, it offered sell side, and it offered buy side again. Okay. So that's a balanced price range. You can see here, once we got there, look what happened. Do you see how you reacted on that balanced price range? Okay. Now, you can see, now let's go down to the 15-minute time frame and look and see if we have a model. Okay. So let's look at this day, July 21st, okay, 2023. We'll go to 15. Okay. So here we go. Right here. Same thing. Same thing. So what do you have? You have accumulation. You have manipulation. Okay. You have a high. I want you to pay attention. You have a high. You come down. You have another high. Okay. You can clearly see what we tap into. Right here. Inefficiencies from yesterday, inefficiency here. Order block. Okay. Accumulation. What's there? If we're chasing stuff to the sell side, we're chasing after sell side, then that's what we're looking for. Okay. So you can clearly see once we break down, have a break of structure. Okay. Right here. What do we leave? A fair value gap with that market structure shift. So what would we do? We would place an order and we would start chasing sell side. Okay. Clearly you can see that this low, that low, these are all weak lows. Weak because this low, and then when it came down, it did not sweep that low. Okay, so that's a weak low when you see stuff like that. Here, we came down and did not take that low and pull all the way back up. Okay, so you could have got another entry because this right here, all they did was engineer liquidity, and you can see as it came back up, you got another entry. Okay, and swept all the way down, end up sweeping these lows, and you could have been out. Okay, that's simple. So that was your weekly level, your 4-hour structure, and PD arrays. Okay, and then you can go down to the 15-minute time frame to catch your buy or sell. Okay, now I am a big believer in the turtle soup unicorn 90% pattern. That's my setup. Okay, so you can clearly see that really in reality, this is pretty much an OT entry. Okay, so you could go from swing high to swing low, 62%, boom. But you can see here the fair value gap here, it did not fill it all the way. So once you got back to 62%, there was a precise entry at 62%, and boom. And did you hit a 2R? Yes, you did right there, the very next day. Okay, that's intraday traded, guys. Okay, so sometimes with that model there, you might have to hold for a day or two. Okay, but there's a 2R. See if it ended up dropping further. No, I think it ended up pulling back, but you catch my drift. Okay, now we're going to do the daily. This is the one I like. Okay. Okay. So you can see here what happened. Daily time. We swept a low. Now, what do you think we're going to go after? Okay. This one's going to be easy because I like this. This one's way easier. Okay. What do you think we're going to go after? Okay, there's a fair value gap. There's internal liquidity. There's internal fair value gaps. Okay, so that's what I think we'll revert back to. So now you want to break down to the 1-hour time frame. Okay, and then you can see here, yesterday we had a big spike down, sweeping that liquidity. And as soon as we swept that liquidity, we just placed right back up. Okay. Now I'm thinking to myself, okay, the internal liquidity is way up here, but where's the real logical area that I could take profit that I know will hit inside my session or inside my, right? So you can see here that I would target yesterday's high, previous day's session highs, or previous day's high. Okay. Now, let's drop down to the 5 minute. Okay. This is the trades that I did not get to be a part of these trades. I wish I would have taken them. But today, sometimes guys, you gotta really, weigh out what's more important, the career of trading or, just being in a trade every day. And I just feel like that the career means more to me because we had news at 3:00 today, the Fed speaking, and I don't want to be a part of that. This could have easily ranged all day and then waited for the Fed to speak, manipulate and then go its favor. It could have easily done that. Did it become a beautiful setup? Yes, it did. Did I put 2 risk rewards on it? Yes, I did. Okay. So here was the very next day. You can clearly see that there was the sweep here from the previous day. What did it lead? We broke structure here. Okay. What did it lead? Inefficiencies. Okay. What's right here? Previous day's high. That's my draw. And the previous day from this day, high. That's my draw. Okay. So once we accumulated here, you can see Asian, London, we come down, make a low, we come up, make a higher low. So this right here is weak to me. This is a weak low. Okay. I want you to pay attention. You can see 7:30, we had news at 7:30, we drove up. Okay. And made what? Relative equal highs. I was like, boom, we got it. So then look what happened. Look what happened at 8:30. 8:30 is right there. Okay. This is the reason why I tell you timing is so important because you can play their game. 8:30 rolls in right there. Okay. Wham first. Sweeps the low, pulls deeper into inefficiency. What do we have from yesterday? Boom, boom, boom. Displacement. Breaker. Okay. Now, since we have that from yesterday, inefficiency, breaker, low comes up, lower low, displacement, break of structure right here. And get rid of this. Break of structure with a custom with a fair value gap. There's 2 entries. You could have entered right there on the top of the breaker, which I did here. And then you could have entered, there was a extreme fair value gap with a custom with an order block inside this leg right here that had come down and respected. I was like, oh, cool. If it respects this fair value gap, about low past it, I'll get another entry. Okay. So we tagged in and then look, 3-1, and we could have had a lot. There's a 2.6. There's a 5.8 R just by doing, okay? These are high probability setups. Now, what do you think my expectations for tomorrow is, okay? You can clearly see that the starting of the week, look where we're back. We're back at opening week price, okay? So first thing we did at the beginning of the week is look, we're up, we're down, we're up, we're down. We accumulated, we manipulated. What do you think we're doing for the rest of the week? That is a weekly profile. So we might come in tomorrow, this be the draw, okay? We accumulate, manipulate, back into this move, and then displace, okay? Now, don't quote me on that. I'm not saying that will happen. I want to get inside. That's the reason why I'm like always, trade inside your session, trade inside timing. If you're trading every session, you're shooting yourself in the foot. Now think about if you were trading all day. It doesn't make sense. It doesn't make sense. You're going to have paralysis analysis and the market will get you. End up taking your money, okay? If you have a 3-hour window that you're trading, it leaves less room for error, okay? So now, let's break down to a scalping method, okay? So let's go to the 4-hour. And let me get rid of some, let me just go to another pair. Let me go to S&P, because there's a lot of, or Let me go back to NASDAQ because I can delete this, remove drawings. Cool. Okay, so we'll go to the 4-hour time frame. Okay. Now, let's go look for a sweep. Okay. Or a pull into a internal liquidity. Okay, so this is good here. So we have a sweep here. Okay, sweep it below right here. Now let's go down to the 15-minute top. So what day is that? That is 25th. Okay. Okay, right here. So we have a sweep at that low. Okay. Now, I'm not trying to get you to trade against the trend. Okay. This is a scalping method. That's why it's quick. You get your profits. You get out. Okay. Now look. Now we're inside of our timing. We just swept that low, right? We come up, we come back down, we sweep this low inside of our timing, inside of our session. Okay. Now let's go to the 1-minute time frame and catch our entry. Okay. Because now what do we need to figure out if we're going to do time framing? Okay. We got our 4-hour level that's already, okay. Now we're going down to the 15-minute time frame to see what we could go back to. Okay. Inefficiency. High. Oh, sorry. There's a high right here. Oh my God. Well, put it on there. High right there. Okay. So now let's go down here and go to the 1 minute. Okay. And here we go. We're inside of our time. Okay. Get rid of this. Okay. Here is 7:30 right here. Look what 7:30 does. We come up. Okay. We manipulate up. But guys, I really want you to pay attention to equity. You always want to wait for equity on indices. Okay. So look here. Look what 8:30 does. There's 8:30. Swipe. Swipes the low right here. Okay. And we displace up. Okay. Now, once we displace up, we break this high right here. Sorry, let me get rid of this. We break this high. And we break this high. Okay. And we break a structure on both. Now, once we break structure, here is your 2 entries. You could have waited for the breaker to come back into the breaker. There's the entry. So here's the entry. Boom. Stop loss. Okay. Take profit. 2R. Did we get it? Yes, we did. Okay. Or you could have entered on this fair value. Okay. There's no real extreme fair value gap other than right there. So yeah, I probably would have waited for this one. Okay. Or you could have entered right above where this order block. Look, last down candle, fast move, custom with a fair value gap. There's no wrong with that. Okay. There's nothing wrong with that. You could have entered here, stop loss, 2R. Or at least to the internal liquidity, 1.8R. I know the stop loss is a little big. Or you could have got the extreme FEG right there, stop loss. And that would have been almost a 3R trade. Over a 3R. Okay. So there you go. There's 3 different types. Guys, the difference is you need to be patient enough to wait for it. Okay. I just showed you every setup on how to go from higher time frame to the next time frame for structure and PD arrays, what it's drawn to, and then go down to your lower time frame Wait for this setup. Wait for it. And then take the trade. High probability. Okay? If you need to get a screenshot one more time. There you go. There it is. Okay? Here's your swings. You can swing pretty much like this too, and intraday scalping. Okay? There it is. That's what you need. Okay? I just showed you everything you need to know. Okay? Even with the setup. I want to reiterate that one more time. Okay? With this. Here, sweep, again, here, return, go. You can have a breaker entry or a fair value gap here, or that's the buy moment. Sell moment, here, break up structure. You want to break up structure, okay? Return to breaker or return to fair value gap. There's the entries, okay? You can even do this. Do what works for you, that fits your personality. Take the fibs. Go here. Go from swing high to swing low to swing high. Let it return to 62%. Get an entry. Or the 70 and a half. Okay? That is a discounted entry. Same thing with the sell. High to low, 62% or 70 and a half, catch an entry. Okay. If it's a custom with a fair value gap, bonus. Okay. Bonus. And 9 times out of 10 it is. Okay. Now, sometimes you might miss a trade just by wanting a extreme, and that's okay. That's okay. That's okay. Sometimes that the breaker will hit the breaker and just run right away. Okay. But sometimes it's going to get you a precise entry. You got a small stop and have a big ass trade. Okay. So that right there is money. Okay. I want you to study it, rewatch this video. Put in the comment section about what you didn't understand. Okay. And maybe I can clear up some stuff. Okay. Because I want you guys I want you to be able to understand what I'm talking about. I think I did a pretty good job about, explaining it, but it's self-explanatory. I just gave you the roadmap. Okay. Go back at the beginning of the video or right when I did it while ago, take a screenshot of that or write it down. Okay. So with that, guys, I hope you got value out of that. Don't forget to like and subscribe. It inclines me to do more. Don't forget to go and join that free Telegram. If you want a video shot, put it in the comment section below. With that, guys, I hope you got value. Keep pipping and dipping. See you on the next one. Peace.